I'd like to thank everybody for joining me today. Today, I want to talk about life insurance reviews. I think this is something that's extremely important for all of our clients that have purchased life insurance. So, if you start looking at this, life insurance provides a lot of value to the client if it's properly set up. It can provide protection for family, for business, that death benefit or income replacement is going to be key to helping them complete their plan. If you also look at it, it can be set up for retirement. So, focused on the cash value, the supplemental income, really being able to, if you want, build up that cash value for what if, whatever life brings to our client in the future. And we know that we have riders that can be added to the newer policies for long term care or chronic illness. They both cover the same thing, but a little bit different. Life insurance really is that piece that connects all of the different planning modules together to help our client complete their plan and really have a solid plan going into the future. So if you think about it, if our clients have bought this policy, is that policy doing what it's supposed to do? Does it still fit? So every policy, and review starts with the goal. Think about this. If a policy's bought 10 years ago, it might not match, for what our client needs today. So let's look at this, why? Well, policies drift. The original assumptions don't hold up over time. The policy, return has not been as good. There could be changes to cost. It may be doing better. All of those things. That policy, once it's illustrated, it is the policy doing what it was supposed to do so that it fits going forward. And the other part of this, our clients' lives change. Their families grow, their families, their kids get older, the kids move out, they go to college, they, started their business, now they're at the end of their career. Health and retirement goals have moved. All of those things that just are day-to-day changes in the lives of our clients can affect, the goal of that policy. Not that anything was wrong with the policy, it's just the needs have changed. And finally, products evolve. So if our client needs long-term care and they had bought their policy 15, 20 years ago, they don't have a chronic illness rider or potentially a long-term care rider on that policy, and they may want it. So as these policies get better, as the insurance companies evolve, we want to be able to say, maybe we have something better that fits your goals as we go forward. So if you think about, what can go wrong? Well, the premium no longer fits the cash flow. Our client has gone into retirement. They're now on a fixed income. They bought a term policy and whoops, now the term policy's gone past the term and the premiums have gone way up. Or, you know, they've had hiccups in their business and the cash flow is a problem. So premium could be off. The coverage could be off. The death benefits, too much. Things have changed. They don't need that death benefit to protect their family because the kids have moved out. Or in a lot of cases, it's not enough. And so we have to start looking at it, can that coverage be changed? Are the beneficiaries correct? I've delivered bad news to clients throughout the years that there was a divorce and they never changed their beneficiaries. So an ex-spouse is now getting the benefit of that policy versus where it needed to go. So it's not going to the kids, it's not going to the family, it's not going to the business, it's not going to a partner to buy out the other partner in a buy sell. All of these things on ownership and beneficiaries are important and they need to be kept up. And finally, are we missing out on living benefits, long-term care and chronic illness riders, cash value access, all of those things that we wish we could have put into that policy, but they're not there. So if you're not doing a review, you risk a large surprise at the wrong point in time. So we want to make sure it all works together. To do this, to help our clients, we have to go through a policy audit. And if you think about a 7-point audit checklist, have life events changed? Have goals and obligations changed? Is the death benefit accurate and correct to what it needs to be today? Is the premium sustainable? And I see that where a client can't make their premium payments, and if they're not being reminded of the problem of that, the policy can blow up versus, hey, can we just adjust the policy to the right premium? Do we need cash value and living benefits into this policy? Can we go ahead and add those? Are the ownership and beneficiary designations correct? And are we getting the right performance, or would our client like other alternatives to potentially lock in a more fixed return or get a better return? All of these are issues that will be uncovered in the policy audit, and then we can start looking at what that can do for our client. When you look at a policy audit, number one, start with the client. It's about them and their goals. What's changed in their life, for their family, their business, their health, their retirement. All of this, we need to ask them where are they at today going forward. We can't go back in time and redo the policy from day one, but we can look at it from today going forward with a better lens. What's the policy supposed to do for you today and into the future? Not what it was in the past. That's gone. What is it today and going forward? Is the death benefit right? Does it match your goals and obligations? And is the premium comfortable, intentional, and sustainable? Basically, can you continue to make the premium payments, or are you in a position to make higher premium payments for a better benefit? After we've talked through our client about their situation, then let's examine the policy. When we look at that, is there usable cash value, loan flexibility, living benefits that the client values? Is the policy itself doing what it can do? Are all of the owner beneficiary, all of those details, are they correct? And is the policy performing as expected, or should we look at other alternatives? Not that we're going to make the jump, but we need to make sure we look at them and see if we can improve things for our clients. If you look at the possible actions now, client can keep the policy. Client can adjust the policy. There again, a lot of clients buy and buy that policy and put it in the drawer. We want to make sure it's doing the best. So if we can keep it or adjust it, great. Can we convert it? If it's a term policy, can it be converted to a permanent policy? There again, we don't have to worry about insurability because it's already locked in the term policy. Can we do a 1035 exchange from a current policy to a new or better policy that is going to meet our clients' goals based off of what they're trying to accomplish? And finally, hey, we've got to remember this is a requirement in some states that if our client's going to walk away from this policy, we are required to look at life settlement to see if we can get a better result versus just canceling the policy and taking whatever the insurance company is going to give them on that surrender. All of this can be a simple process and should be a simple process. When you start this process, we need to gather the policy and the statements. When we get those policies and statements, we're going to be able to see a lot of the detail of what's happening in this. We're not guessing. We want to clarify the goals and any changes our client may want or need with this policy. And we have to divide those between want and need, because they may need a new policy, but their health doesn't allow it. So we want to make sure the goals that we understand goals and objectives. Get a current in-force illustration. Don't guess at what the current policy is doing. Let's order that in-force illustration. That tells us today going forward, based on the assumptions we have on premiums and all of those things, how is this policy going to perform, so we can give our client an honest assessment of where they're at. And then we compare the fit and the performance of the policy today and what we can do. And then let's make the recommendations of keep the policy, adjust the policy, or replace the policy. All of these things are going to help our clients understand what they bought, how it's working for them, and if it needs to be fixed somehow. So I appreciate everybody getting on. If you have questions, reach out. If not, we'll talk again next week. Thank you.